Very good morning, everyone. Charles here. I hope you're all well, refreshed, ready for another day ahead. No live, but of course, I will not leave you high and dry. I will share with you my insights, just in a slightly different format. So, GBP straight out the gates, GBP USD, for me, that's pretty much textbook. Now, without going into the higher time frames, let's just stick with the 15-minute for now in terms of Asia range fills. What you will see is picture perfect. So what I like is always price comes up into the area, starts trending up. We then have a snap in the market, which leaves an order block behind. Price then makes its beautiful way back up to that area. We'll be looking for the imbalance up at those highs before then looking for a lower time frame break of structure for the short position down. So if that is my perfect looking setup, let's just put one line in there and call that a break of structure, like so. That's the perfect setup. Let's have a look above, stretch it out for you. We can see prices coming up, making higher highs, higher lows, higher high, failed to make a further higher high from this area. And then what we've had was the first break of structure. So we'd call this the lower low, potential lower high. Then we've had a lower low, looking for a lower high again in around these areas. Potentially we could have called it, well, at the time we certainly called this a lower low, but price has now come into an area of imbalance, which to the left you can just see exactly there. That's the trade that I think we caught yesterday, to be quite honest. Price came into that area, which then provided us with the lower low, which we now have. So we delete that, move across, and now we're in this position here in terms of the textbook setup. So waiting for price to come up into those in and around that area before looking for a sell. So what we have on side as well as that is the fact that it is a higher probable setup, a higher directional trade, which in turn is a higher probable setup without just taking into consideration the Asia range fill. So what we have here is previous daily highs. We know we're in and around a 4-hour order block, and with that white line, I know behind or above that 4-hour order block, I know we are trading in a daily order block as well. So a very high confluence area. What we have in terms of helping our position also is the fact that Asia up here, to be honest, even if it is available, it will just allow us to be more patient when price gets up here, wait for that break of structure, and ensure at that point then we are still covering those highs, not these highs. That's a separate trade altogether, but certainly covering these Asia highs, which even if Asia has been filled, we have those wick areas, and as we know, wicks often come to get filled. So that would be a really nice textbook position. Hopefully Asia is available by the time we take this position, so not only would it be an Asia range trade as a result of a snap pullback retest, higher time frame as well, it aligns really beautifully. Unfortunately, on the flip side, as you can see, price is currently trending above that 4-hour 50 EMA, so our range is somewhat reduced. I mean, 4.5%, we're not complaining so long as we can get ourselves a really nice entry, and at least get down to that 4-hour 50 EMA. I'm be looking for at least 3% by that point regardless. So 4.5, just based on rough guidance, is pretty good. So that is the play on GBP US dollar. Just trying to think, is there anything I've missed before I go to another pair? But I hope you can see that it is picture perfect in terms of break of structure, break of structure, break of structure, lower lows, lower highs, imbalance. Just sit patiently for this, and then we'll take the short once you get that lower time frame break of structure. The alternative in taking that position, which also is very nice, is simply the Asia range fill. But regardless of the Asia range fill position or not, the take profit is going to be so close to that 4-hour 50 EMA anyway that it doesn't really matter what type of trade that you are going to take. But for example, the Asia range fill, it's not going to be from here, and I hope by this stage you guys know why I will not be taking that position, and it's simply because this order block, it's not a valid point of interest because it hasn't caused a break. The whole point of selecting a 15-minute order block is it must be as a result of a break of structure. That's why we're going to use this one up at the highs, because this 15-minute order block was created as a result of that push, which then broke structure to the left, wait for the pullback into imbalance, lower time frame break of structure before looking for the short. Now, the Asia range fill position, of course, you know this all already. We just isolate a point in the market within Asia. Within Asia, and once London has opened, I'm expecting London to break Asia but not fill Asia, break and then pull back into an area of imbalance before looking for, that would be a tap entry on a refined 1 minute entry. So more often than not, and hopefully there'll be a 1 minute order block right up at these highs, which would then allow us to take that tap entry from there, cover those highs with the stop loss, and then we'll be looking to trade that down to the Asia range fill. So that would be your standard Asia range positional trade. If you don't get that break of structure in or after London breaking Asia, then you guys know me already, I'll need that break of structure up at these highs. Once price comes and taps into that 1 minute order block, I'll be aggressive, break of structure, pull back, leave me again with a 1 minute order block that I'm able to trade from, and it's going to be a simple position just like so. So much the same, in and around the same areas. Be sure do not reduce your stop loss in order to capitalize on your range. 3% is what you should be going for, but nevertheless 2.5 does work from time to time. But what I'm trying to say is don't do this in order to do that. It's important that your stop loss remains to the point or the place where it should be. And if price comes all the way down here, then it might be one that you have to let that trade go, wait for price to pull back into an area of imbalance, which more than likely it is going to come, as that's how price trends, and then take an entry much higher up, which will give you a better risk to reward ratio. So that's GBP/USD in terms of the lower time frames. Now, just to paint the picture for you all, as you can see, higher time frame, weekly order block, refined daily. Price has come into that area and we've had daily rejections from it, so that's exactly what we want from a daily and weekly order block. On the 4 hour, we've got that confirmation via 4 hour break of structure again. In terms of if this was just going to be a 15-minute structure on the bottom left hand chart, then what we'd see is price was consolidating, we've broken out, going to pull back into an area of imbalance before looking for the rollover short. It's exactly what we're doing on the 15-minute. So we've had a breakout of that structure, leaving an area of imbalance up at those highs, and we're looking to take the short. So what I've also noticed at the top is it's remaining there, to be quite honest. This is a tap entry for me. This is sort of the last position that a short could take place. So this is a sell limit order. It's been on continuously throughout the weeks, or at least from last week for sure. But price has not got there, so I don't expect it to come back, since we are now making lower lows and lower highs and price is trending nicely. But in the event that it does, I'm looking to take this immediately from those highs and then have that trade come down to that 4 hour 50 EMA before we can expect a turnaround or at least some rejection in price. That's GBP/USD, guys. Try to make it as quickly as possible so you could digest it nicely, but do take care and all the best in your trading day. Take care.